Have you ever wondered how startups get money to grow from a small idea into a big company? In this video, we're going to explain funding rounds for startups in a simple and easy way. When a startup first begins, it usually starts with something called the pre-seed stage. This is when the founders use their own money or get small investments from friends and family just to turn an idea into a real product. The amount at this stage is usually small, often between $10,000 and $500,000. Next comes the seed round. At this stage, the startup already has a product idea and maybe some early users. The funding usually comes from angel investors, startup accelerators, and early-stage venture capital firms. Well-known investors at this stage include Y Combinator, Techstars, and angel investors like Paul Graham or Naval Rock. The amount raised in a seed round is usually between $500,000 and $2 million, and it helps the startup improve the product and test the market. After that comes Series A. This is when the startup is more established and wants to scale the business. The funding in Series A usually comes from venture capital firms such as Sequoia Capital, Andreessen Horowitz, and Axel. The amount is often between $2 million and $15 million, and this money is usually used for hiring a bigger team, improving the product, and expanding marketing. Then comes Series B. At this stage, the company is already growing quickly, and the funding usually comes from bigger venture capital firms and institutional investors. Well-known investors in this round include SoftBank Vision Fund, Tiger Global, and General Atlantic. The amount raised in Series B is usually between $15 million and $50 million, and it's mainly used to expand into new markets and grow the customer base. After that comes Series C and later rounds. These funding rounds usually involve large venture capital firms, private equity firms, and sometimes corporate investors. Investors at this stage can include companies like Silver Lake, BlackRock, and major global investment funds. The amount at this stage can range from $50 million to hundreds of millions of dollars, depending on how big the company is and how fast it's growing. Now let's look at a real example of a startup that followed this journey successfully. Airbnb. In the early days, Airbnb started with a very small amount of money from the founders and friends. Then it raised a seed round of around $600,000 from investors, including Y Combinator. After that, Airbnb raised a Series A round of about $7 million from Sequoia Capital. Later, the company raised multiple rounds, including Series B and Series C, worth tens and then hundreds of millions of dollars as the company grew globally. Finally, in 2020, Airbnb went public through an IPO and raised more than $3 billion from public investors. This is a great example of how a small startup idea can grow step by step through funding rounds and eventually become a global company. And that's how funding rounds work, from a small idea to a global company. If you enjoyed this video, don't forget to like, subscribe, and let me know what startup topic you want next.